Steve, our week began with breakfast with Tom Albanese, and it began a whole week of briefings by the big miners during the week. Not just him, but also BHP's people. And the main message seemed to be that there was a note of caution, and that they weren't hell-bent on spending billions on new projects if the returns look doubtful. And so, they're clearly putting a message out there, probably to the government, I guess, and more generally to investors, that they're going to be disciplined, and you can't assume that all the projects in Australia's resources boom are going to go ahead.
There are two dimensions here. One's the global one and the other one's obviously the local one. At the global level, I think since the start of this year, both BHP and Rio's language has changed quite significantly. And whereas last year they were talking about, BHP was talking about its $80 billion pipeline of projects, and Rio was talking about its key projects, which combined are about $55 billion of investment. And it looked like they were going to do them all at once. Since the start of this year, they've said, hang on, no, we're going to start sequencing them. We're going to choose which ones we actually are going to go first and put the others on the back burner for a while. And that's partly because China's slowed. China's GDP growth is...
But it's a lot about costs, isn't it? I mean, what they're complaining about is that costs, both capital costs and operating costs in Australia, are going up a lot, and they're more tthan anywhere else in the world.
Yeah, Rio has is reviewing its coal expansion, that Mount Pleasant development in New South Wales, which, arguably that was marginal anyway, but when you've got costs going up by 16%, it sort of tips it over the edge of being something they don't want to pursue. But, is this going to put just a little cap on the mining, on the resources boom? Probably. There's still a huge amount of investment in the pipeline, isn't there?
It's also important to remember both BHP and Rio are multinational companies. They have their history, their antecedents in Australia, but they look at things all around the world. Alan, a year ago, both you and I were convinced that BHP would make a takeover bid for Woodside. That hasn't happened. Instead, BHP is spending its energy dollars, it appears, in the United States. They're looking at things not just in different parts of Australia, but around the world. And it's hardly surprising that if you've got $8 to spend, projects in other parts of the world probably seem quite attractive.
Capital costs are going up globally, so that's a global issue. But Tom Albanese said on Friday that Australian labour costs are 50% higher than those in the States, and up to 10 times higher than those in the developing world. So there is a particular issue in relation to Australian costs. And then you've got the budget coming. You've already got MRRT in place, which won't raise much money, so they're not really worried about that. The diesel fuel excise rebate, there's a question mark over it. If it goes, it could be quite dramatic. And they're talking about changing the tax treatment of the removal of overburden from being a deduction to being a capital item. Put those things together, and it's not surprising the miners are starting to say, hang on, we're not going to commit ourselves to these Australian projects until we see a more competitive environment.
But most of the projects are LNG. If you, by number, by amount, by dollars, by everything, it's mostly an LNG boom in Australia. And what we saw this week was Woodside selling 15% of its Browse development off Broome to a Japanese joint venture for $2 billion. And apparently there was any number of buyers. Here's CEO Peter Coleman.
The demand was very strong. So I had more demand than I had equity that I was willing to sell, and it was very competitive. We see a lot of value in retaining operatorship for Browse. It gives us the control with respect of how we develop and take that to the joint venture, and that's very important, particularly in this early phase of the development itself.
So it's all happening still in LNG.
Well, look, it was an excellent result for Woodside. People are hugely worried that Woodside's got this massive capital expenditure bill coming up, and it's showing what it's going to do. It's going to sell chunks of projects for considerable amounts of money, spread the burden of developing them, and I think that's an excellent result for Woodside shareholders, no doubt about it.